All righty. So market's been gapping up pretty much all night. Not much though. You got the Dow up about 122, 121. ES is up about 17, almost 18 right now. Nasdaq at 52, up 52, and the Russell up 12. Gold having a nice bounce, up 22 handles, as well as silver. As well, near $59. Yeah. Bonds up a few clicks, not much. And the dollar having a little bit of weakness. And I think more importantly, volatility is kind of slowly easing off here as we progress into the last trading month of the year. And that's pretty much it. There's not really a ton of news hitting the tape other than just the normal gibberish that you hear on a regular day. I don't think it would be a news cycle if Trump didn't offend somebody, which is always fun. Bitcoin having, I think, probably the story of the day is Bitcoin kind of having a really strong comeback yesterday. And social media killed the rock star, man, because you hear all this garbage like circulating, the reason why is because, the shorts got squeezed. And it's like, how the fuck do you have no idea. You know why it went up? Because there were more buyers and sellers. That's why. And anything else that you hear is all just smoke being blown. Just being in this business as long as I have, or trading as long as I have, it's probably true. There's probably some of that's true. It's probably, I bet you a lot of shorts maybe did get squeezed. Or, rather than get squeezed, I think maybe a lot of them just kind of bailed out. They've been short. They got short when Bitcoin was well over 100K, and they cashed in. And they covered their shorts. Okay. So now what? And if that is the reason why, you should be, if you're a crypto investor, you should be concerned. Because if that's all that rally was people covering their shorts, what do you think they're doing now? They're probably reloading. So, anyway. Again, my whole shtick on crypto. It's, I always reiterate, it's nothing more than just an asset class now. And that's it. And that's how it's being treated across the board for all of the investment community. As a whole, it's just another asset. Think about it. You're running a restaurant and you don't serve hamburger, but every other person who comes in is requesting hamburger. Eventually you're going to put a hamburger on the damn menu. And that's basically what happened with crypto. You had enough customers and clients demanding it. And so the investment community delivered. And now we have ETFs, right? We have futures, and that's what it is. So don't get things confused. I still think crypto is I still think Bitcoin goes to 70, 75 at some point. I think there's going to be another washout on it. And I think, again, that's kind of that's why I'm waiting. And if it does get down to 70, I would definitely step in. 75 is kind of my mark. I'm staying away from it here. I think there's a lot of manipulation going on. I think underneath the covers, I think there's more liquidity problems in this space than we're being told about. And I don't think it's anything that's gonna drive a crisis, but it's going through kind of growing pains. And you kind of have this industry now that was kind of founded on influencers and basically, man-child and man-women in their basement promoting this thing, to now it being like a legitimate asset that has been embraced by the financial community. And you kind of have this battle going on now between the old investment guard and these new influencers. And I don't think they can even, these influencers and these crypto folk, I don't think they can accept the fact that their baby has gotten taken over. It's not theirs anymore. And then and coming out and beating the table and making these flashy videos and all that other stuff has no influence over these products anymore. And flashing up these crazy news stories about XRP and this one and this meme coin, it doesn't work anymore. It doesn't work. And I shouldn't say it doesn't work. It may work on certain things, on some of the garbage that's out there. But for the most part, they've lost the product. And it's only a matter of time before they kind of melt away, because they have not been able to accept the fact that their baby and their product has gotten taken over by the financial institutions. And everything they railed against is now true in their products, just like every other financial asset. And so, again, you have this battle going on too. And I think that's, another thing going on here. And as that kind of withers away, I think you're going to continue to see the big volatility in Bitcoin overall and in all these cryptocurrencies. And then you have the likes of, these, I don't know what do they call them? They call them like mining companies, which I don't really even know if that's, even like a, I don't even know if that's really a proper designation for these things. But, like the MSTRs and some of the other ones. I mean, this is the biggest one. It's basically a mutual fund. It's like a closed-end, not mutual fund, but I guess it's kind of like a mutual fund. Yeah, I guess it is like a mutual fund. Or like an ETF. It's basically like a exchange-traded fund, because all they do is manage Bitcoin and then loan it to buy other. And I know it's been said before, but it's only a matter of time before even this kind of unwinds itself and blows to pieces, because just the model in general here, and I think that's why the investment community at large is kind of in awe at this thing, just looking at it, that it hasn't kind of imploded in itself. But I think it's just a matter of time before this does, and I think that might be another reason why Bitcoin is really going through a reckoning here, as a lot of these types of companies like MSTR kind of unwind their Ponzi schemes. Because really, when you look at how this whole thing is set up, it really is kind of like the epitome of what like an Enron, or I'm not even say Enron because everyone likes to throw Enron out there, but it definitely has like all the characteristics of a Ponzi scheme. But it's eventually going to catch up with itself because, as of all these pullbacks and as it continued by Bitcoin, right, that average cost of what they hold, that margin is depleting heavily. because Bitcoin is not progressing higher fast enough for the amount of debt that they're starting to take on to repay the loan. So, at some point when that catches up to itself and it's truly at a break even and it will eventually start losing money. And I think that's a lot of what's going on now too, is because Bitcoin's biggest advocate and basically biggest purchaser, which is MSTR, will eventually become will become unprofitable and possibly be able not to even pay back its loan, pay back interest on the loans it's been borrowing and the money it's been borrowing. So I mean, again, it's kind of, and I think we're watching that in real time, and we're watching this thing unwind. And I think once this eventually does kind of unwind itself, I think then you'll see Bitcoin kind of, and all the cryptos maybe kind of take off at that point. Because you'll kind of get, I kind of equate this to like the financial crisis of 2008. You need to get rid of like all this bad stuff that's on the balance sheet in order to progress forward. And that's kind of what's going on now. And then this is all my opinion. I've been wrong before, but that's just how I interpret what's going on with Bitcoin right now. And not just Bitcoin, but all the cryptocurrencies. Which is why I'm sitting on the sidelines. I'm not a hodler. I actually own 0 cryptocurrencies at this point. Got rid of everything, and fortunately, I was able to I didn't get rid of it. I wish I could say I got rid of it all at the all-time highs. I was close, but the minute they pulled back a month or so ago, 2 months ago, whenever it was about a month and a half ago or so, I got rid of everything. I was like, you know what, it's time, and I got rid of it. So anyway, there you have it. As far as some levels, let's get into that. I don't want to sit and talk about Bitcoin because I know I'm sure I'm pissing people like off. I could just feel the crypto bros and gals just like brewing there, like he doesn't know what he's talking about because blah, 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 blah. It's like, dude, shut up. I do know what I'm talking about. Because these so-called blockchains that you say everybody uses, they've all gotten copied. JP Morgan, Morgan Stanley, Goldman Sachs, they basically started using those so they could copy the technology, and they just built their own stuff in-house. And so they're using their own private blockchains. Oracle has their own blockchains now. All the cloud providers do. So it's like, dude, shut up. And I'm not proud about it, that the fact that they, basically stole that technology, but you kind of have to blame them. You have to blame the coins themselves, because they allowed it to be open source. And they allowed it to be taken. So, it's their own fault. And so that's what's going on. So anyway, some levels, lots and lots of levels today. So R2 6870.25, have it marked from a while ago. There's another spot just underneath that. Let's see if I can span this a little bit. There's another spot just underneath there, which is, we put this one on there a couple of days ago, actually quite a while ago, 11/17, 68.65. So very close to that. So I'm going to be watching that. Again, all possible shorts up here. And, and the obvious big kahuna up here is 68.90. And obviously, the reason that's significant is because we get that much closer to 67 honey. Or excuse me, 69. 67. I'm all right. I haven't finished my coffee. 6,900. Yeah, right. Jackass. I am. So anyway, and I have the mark here in red, the 69 honey. I think it's 6902 is where I actually did. 6901. 6901 Wapner at 4 o'clock. Wapner. So there you have it on the upside. It does look to me like you are going to get some decent resistance at that 66.85, right? Because swing high here. So if you were to like look, again, technically speaking, you have that swing high here. You have swing highs from yesterday as well. And so you do have a little bit of a short-term like double top here, so you might see some resistance up there. So again, I think that is a good spot for a possible short here today. Ultimately, the best spot is 68.70. Why? Because it's an R2 and I have it on my chart, right? That's why. And nobody else in the whole planet has that on their chart, right? But me, right? Yeah, sure, right, right. So anyway, for those interested, and I get these questions all the time, these are what I have on my chart, right? This is the volume profile, the visible range volume profile. I also have the session volume profile, which I don't usually turn on unless I'm looking for something specific, or I'm looking for like a high volume node. I have the pivots, obviously, and I have them set to Fibonacci pivots. I'm using the daily, weekly, monthly high lows, which is just a high-low marker, and I usually have it on the daily. Usually don't really give a shit what the weekly high is or the monthly high. It's usually the daily. Auto fib extension, this one's really good when you're looking at things that are near all-time highs, right? So you're looking for levels, maybe, possible extension levels up and above where the all-time highs are. Why? Because obviously you don't have any data there. You have no data. You have no data up there to really like make any kind of, and so what this does is it does kind of give you a little bit of, mental masturbation type of thing. Like here's some levels that may be, and again, I have it turned off because it's not useful all the time. In fact, it's never really useful. It's just more like a peace of mind. Like, oh, here's some levels that may actually be of value at this point. Same thing with auto fib retracement. Again, these are not useful at all when you're trading in a trading range like this where you have data. This is more for looking, if you're looking for levels up and above what you have data on at that particular point. So anyway, and you see I have them turned off almost all the time. And so unless I need to use them, I turn them on. And that's it. And other than that, I don't use any other indicators. I don't use any, especially for futures. I don't use any other indicators. I don't use any other anything, right? It's all about price and volume for me. So anyway, there you go, in case you were interested, because I know people ask. So that's what I'm seeing on the ES. As far as downside, it's going to be all the same kind of spots. S2, a very interesting spot. It's aligning with some previous alerts, and so that's always a good sign. So 6807 to the downside for a possible long, and then I have this swing high marked from back on the 20th, it looks like, which is around S3, 67.8750. If we kind of fall down there, that could possibly indicate things are getting a little ugly. So I really don't want to talk about that. But anyway, just throwing that one out there. And that's kind of where we're sitting on the ES as far as I'm concerned for trades. Now, if we move over to the Russell, which was actually very, very good to me yesterday. Traded the levels we talked about yesterday. I can't tell you how nice it was. I shorted off R2 yesterday. I had it marked. We went up there. I hit it. It was really a perfect setup. And, I'm trying to remember. I ended up making about 60 or $50. It was like $50, 50 or $60 because I did one micro. But it worked out really nice because I caught the downswing and then I got out. I literally just like got out, and because I caught good part of it, and I was like, you know what, I'm just going to take my money and run. And we actually went the other way. So it was actually interesting. So again, here on the Russell, I'm going to be looking at 2486.80. 2486.80, which is R1. R1 today. I like that spot. R2 as well, kind of a little short-term double top here, right? These swing highs here from back a couple of days ago. And then this swing high from the overnight, basically from the open last night, it looks like, right? Yeah, about 6 o'clock. Wapner's 4 o'clock. 6 o'clock. So yeah, I mean, so I'm looking at that on the Russell for 2 spots for a possible short. The thing about the S2 or the R2 here, though, to be aware of is that, again, with the problem, not so much a problem, but the thing about the Russell is that it will have a tendency to slip past this pivot. And it's because mostly they come out at night, mostly. But it's mostly because of volume. Russell just doesn't have the volume that the ES has. And, so that's why the ES tends to usually only slip past these pivots by a few ticks, where the Russell can, sometimes 5, 6, 7, even 8 ticks. I've seen it kind of go through those, and again, it's because of light volume, and that's but still, definitely like a little short-term double top there, and I like R2 of 24.92.80. I think the big kahuna today is not going to be even R3, or the one level that we're going to be I'm going to be watching for a while is going to be up here. We have another little short-term double top here at this level, which is over 25 honey, which is exactly 2507.90. And so I'm going to be watching that spot with a like a hawk. All right. That's it as far as the upside. As far as the downside, I really like S1, 2467.70. Very strong spot. I have it marked from previous sessions. So there's definitely some activity going down there, and I'll likely see that as a good entry if and when we get there. As far as S2 and S3, if we get down to S2 or S3 on the Russell, I'm likely going to just stand clear, because it could possibly get a little fugly if that's the case. And so that is it as far as that concerned. And then, I'm not going to disappoint anyone. I said I was going to start looking at the NASDAQ. I'm not necessarily going to trade it, but I'm going to put it up here on the pivots. You can see we've been bouncing off R1 almost last, 1, 2, 3, 4, few hours now. Just kind of slamming its head in here. Likely we will break it, because usually when it does sit up like this, and look, you can say I'm not making it up. I mean, you had 2 candles yesterday that really couldn't get through that area. And then today we kind of sliced through it a bit, but we still having some issues kind of banging through there. So you might want to just keep an eye on that spot here and see if we get any mojo to blast through there, which is 25,678. 25,678. And we're very close. I mean, we could literally bang through that while I'm talking here. Again, I'm not really doing anything here. If there was any spots that I'd be interested in the NASDAQ, it's going to be far from here. You kind of have to go kind of partial to now that I'm looking again. I'm always looking back to give an idea of future. R3 to me looks like the premium spot, which is 25,880. I got to go back all the way to the beginning of last month, November, to get that level. Those are swing highs. There's a number of them, 1, 2, 3, around that area, and that seems to me to be kind of the setup in the NASDAQ if you're looking for a trade. Again, and then the other spot is going to be up here, up over 26K. But for now, that's the spot I would be looking at, would be R3. And sometimes this works, but sometimes it doesn't, and I don't know why. There you go. So yeah, R3 up here. R2 doesn't really interest me much at all. Just trying to get this. There we go. There doesn't seem to be much there. Let's go to the 4 hour. Probably get more data there, yeah, in the 4 hour than in the hourly. You can see here there's not a ton of, here it comes. I was going to say there's probably, the thing that makes R3 really interesting too from a profile point of view is you have kind of this, what I always kind of call them, these volume holes. Right? It's not so much as big as this one, but you have an area where, in general, volume kind of tapers off, but it looks like the majority of the volume there was green. So, there were mainly buyers up there, but they got tired and the sellers took over. So, that makes that yet another area of interest, again, on the NASDAQ where I would, take a look. As far as the downside, I wouldn't, if this thing kind of backs off and starts to shit the bed a bit, I would kind of stay away and I wouldn't catch a falling knife because it might get ugly to the downside, and so I wouldn't want to touch it. So as far as so that's it. As far as futures and everything else are concerned, and that makes me turn my eyes on to earnings. So we did do an earnings trade in a CrowdStrike. This one came in literally right in the wheelhouse. It's currently trading at 5.10. It's actually down 1.2%. We had done the Iron Condor, and I still have it. I have it up here in my account. And we did do the Iron Condor, and there it is. We did the 460, 450, 590, 600. Couldn't have asked for a better spot for this to be. When we put this on, volatility was well up in the 40s. It's currently now at 32.9. Likely that's going to continue to fall. I'd like to see that get under 30, right? I'd like to be looking at, I'd actually love to be looking at like a 20 handle on volatility when this thing opens up. So likely this is going to come in pretty nicely and we'll be able to buy this back. I'm hoping for maybe $1. Maybe $1. So make a good, 50% profit on that. And that one, right in the freaking wheelhouse. Right in the wheelhouse. Now, as far as other earnings like Dollar Tree, I think they're actually out this morning. I did not see anything. Let me see if I did not see it hit the tape, but I would assume that it came out already. And I'm not seeing it. So I don't know if they announced. I don't see it. So maybe they haven't announced. It's only 8 o'clock. I just might not be looking. I can't seem to find it, though. I would have to think that they announced already. But I don't see it. I don't see it. Let me see. I don't know where the news and stuff is on this platform. I'm kind of bad at maneuvering this. I've been using this for a couple of years and I still Don't know what the F I'm doing. Futures rise on Dollar Tree, lifts annual profit target as it sees steady. Yeah, so they did come out with earnings. 640. No movement. Literally, like, came in and it's done nothing. It's up $2. But I didn't do anything on that. We are going to look at, I'm going to look at CRM. I already have a position in there, but I'll put something up for folks to take a look at. Let me just do this real quick so that I just don't like to show my positions when I go on. Not that I don't want to show anybody. I don't care. I mean, I just don't like them to show up on here because it confuses everybody. So CRM, I'm going to be looking at something. It looks like it's gapped up a bit today. And they got earnings after the bell. You can likely sit right around, I believe, you're going to be able to sit right around that one standard deviation. So on the downside, you're looking at puts 210 or better, so 210 or lower. And then to the upside, probably, anywhere 265 and higher. I kind of like the 265. I'm already in a 265. And with this one, you're going to need to do an iron condor because the margins in here suck. And then you can yank $2. Looks like you can yank probably, and I would say by the time this thing closes today and you do this, you'll likely be able to trade like this for $2.35 because volatility is going to climb in here today because of earnings. And that's what that one looks like. And that's a really nice looking trade. It's pretty similar to what we had done in CrowdStrike. It's a $10 wide iron condor. So it's kind of strangle-esque, and meaning that, you're going a little extra wide on the wings. So we're 10 wide, right? 10, right? Third grade math. Actually, I think this is more like second grade. But 200, 210, right? 265, 275. You're going to use about $765 of buying power. You're going to bring in $2.35. Good theta number here at 11. This is the December contract. You're almost delta neutral, which is also beautiful. And then what makes this trade really pop, in my opinion, is this probability of profit at 72%. And so I kind of, again, and the nice thing about it as well is that you're sitting at literally at that one standard D on each side, which is like right in the wheelhouse. And I think expected move, what is it? I think it's $10 if I'm not mistaken. $20, and you're pretty much right on you're pretty much outside of that $20 expected move in December. All right, and that's pretty much it on CRM and earnings overall. And I don't really see much else going on there. And as far as the other companies actually coming out with earnings, none of them are really that attractive coming up, except maybe Oracle, possibly Adobe, and Costco coming up in the coming weeks. But as far as the others right now, that's really the only ones I see of any consequence here and now. So that's that. And it does look like a lot of the, and I kind of have them in an AI group. These are all up pre-market. Your Marvels, this actually had a really good day yesterday, Marvel. Really big move. And it looks like it's up again today about... let's see. Yeah, it's up today about $10. So it's really moving today. ClearSpark, also Hut 8 got absolutely hammered yesterday. Was actually beat to piss. And but that's actually up today. And then you have Oklo, SMR, CRWB, CoreWeave, all up today. So I don't know if something was announced. Let's see. I guess maybe all Bitcoin probably related for the most part, right? Because all of these are really kind of feeding into that, I guess. I don't know. Who knows? Again, there's more buyers in these than sellers. They all kind of move at the same. They all kind of move together. for the most part. They haven't really separated themselves. So for the most part. So anyway, you got those moving today. There's none of these really look very attractive, meaning that if you're not already in them, you're not really gonna, I don't know. Again, I don't really see any trade here because you may have missed kind of the boat. If you didn't really buy into it when they were down, I just brain farted here. What was I going to do? Yes. Right. What the hell was I going to do? I just brain farted. Sorry. This is what happens, man. This is what happened. Oh, Marvel. I was going to look at Marvel. Again, I don't know what it is you really do here. If you haven't, and I'm not one to jump in on something that's just moved like this has over the last couple of days. You got volatility in here, which is absolutely collapsing quite a lot. And you kind of need to be directional in here. And I really wouldn't want to sell calls on this. Yeah. I'm in a position in Marvel. What do I have? I think I have a Iron Condor. No, I'm in a put spread. So I'm in a put spread. I'm in an 85.80. So little baby trade there. So that's actually going to be probably wind up getting rid of that today. Was in an 85. But again, I sold this when volatility in here was up in the 60s and 70s. And so that one's going to be, so I'm probably going to be dumping that today. And also HUD 8, I'm in a put spread in that one as well. Yeah, I'm in a 35.30, and that is actually up a couple points. But that got hammered yesterday. You can see I'm actually getting hit a little bit in that one. But volatility here in a HUD 8, now that I look at this is actually good. Let's take a look at this, because this one you could probably, and you can see I gave myself a little bit of time. I went out to March. Volatility in here, definitely very high. Let's take a look at this. Let's take a look at the December. And if I was going to do anything in here, I definitely wouldn't sell calls. Only because this is a stock that can rip your face off. And not that it can't rip your face off to the downside. I still like the 35s. I still like the 35 puts. Even though I'm already in them in March, or I'm in a 35, I like the 35. So you could sell a 35, and the 35 is sitting at about a 30 delta. 31 delta. So the 35 puts are actually really, and let's see what they're like out in, because I would more than likely go to January, and then we're going to look at the volatility in here. So it's not really a huge trade-off to go out to January, about 10 percentage points from December, not even 10. So, and then we're looking at $11 move. So you might get a little bit better juice. Yeah, absolutely. Like this trade. The 35 and either the 30, the 35.30, or if you want to get a little bit more juice, go down to the 25. Do a 10 wide. And then you're basically just covering it, folks. Really what you're doing here is you're synthetically short 35 puts. And because you don't want to use a ton of buying power, right? So watch this. I'm going to let me make sure I'm in the right account. I'm always in my IRA. I want to make sure I'm in this account. But to get a true feel of the margin. So if I do an uncovered, if I just sell the put, right? Just sell that 35 put in January. It's going to run me 13, so about $1,400 I'm going to have to put up. And that gives me basically 32 shares, right? So the delta's 32, so that's like controlling 32 shares of stock. But I don't know if I really, again, I don't mind using 1,300. I don't know if that's really what it's kind of out of my wheelhouse. So, watch this. So if we did a 5 wide, you're going to see that buying power. See that buying power just go away? So now you're only going to use 300 to make 200. So that's a pretty nice trade. Good risk reward, right? You're controlling about 12 shares of stock. You're only using $300. Your max profit is 200, and you got a almost 60% chance of being profitable. And if this thing decides to shit the bed a bit, it backs off 3-4 points, you're still going to be in the good, because this will still be out of the money. And so this is a nice trade. So I'm actually going to put this on, even though I'm already in something in here. I kind of like this one. And then if you want to take on more risk, don't take on more contracts, right? So instead of doing this 2 or 3 times, just widen the strikes, and let's go down to the 25. And so to use 600, we're going to take in 3. This is probably going to be less because it's actually gapped up. We'll call it 335 because this is gapped up this morning. So the prices of this are actually going to what you get. But more importantly, which is nice about this, the $10 wide puts your probability of profit over 60%. You're controlling about 22 shares, and then you're only using $665. I mean, I prefer this trade. And again, basically what you're doing is you're doubling the risk by widening the contracts, by widening the strikes, right? Instead of doing the other one, a traditional spread, $5 wide, multiple times, and you save yourself on a commission. So there it is. And I actually like that trade. I like that one better than the other. And here's what it looks like. And so it's going to run you $2.22 in commish. $2.22. Now, if I did this multiple times, it would be $4, right? So let's edit. Watch this, which is, let's say I did it twice. So, right, this is an equal trade. I'm doing it twice. Buying power literally doubled. But now we look at the commish. Now it's costing me $4 in commish to take on the same price. So it's never worth adding contracts, folks. I'm just telling you that from experience. It's always, if you're going to take on more risk, just widen the strikes. Much easier, more economical. And, why pay the brokerage firm? So anyway, we only going to do it once. We're going to do this once. And I'm actually going to put this one in. And I'm going to put it in my IRA because I love my IRA. I love my IRA. And it doesn't matter. You can do this in an IRA because, why? Because it's covered. So you can do it. It's a fully risk defined trade. So there's HUD 8. And I just sent that one off just so that I don't forget, because I may have to readjust it when the market opens again, because the prices on this is actually gapped up a little bit. And so looking at that one, little volatility play in there. I don't normally like to do these when it's up, right? I would prefer to do it when it's down. But the thing about this is what makes this interesting is that this volatility has actually stayed up there. And the fact that it got beat up yesterday, it was down like $5 or $6. So the fact that it's even up like a couple percentage points today really isn't a big deal. So anyway, HUD 8. And that's it. That's all I got. I think is there some news today? I don't even know. Let's see. Economic calendar. There's always some news. It's a Wednesday. Let's see. Wednesday, we got 30-year mortgage, NBA purchase index, which nobody gives a frick about. Export prices. Bleh, right? Who cares? Import prices. Bleh, nobody cares. Capacity utilization. I don't know. I think they may try to make that a big deal. I don't think that's manufacturing. No. A lot of nothing burgers. I mean, there's stuff that I guess it matters, but I don't think it matters. The only thing that matters right now is rate cuts, baby. Rate cuts. And look, I'm well aware of the economics of the rate cuts, and I kind of understand the here's my opinion going to come out on rate cuts. is why should the banks be the only ones to reap the benefits of easy money? And that's basically what's being created right now with these rate cuts. And so it's my opinion that, I just get annoyed when they do these 25, 25, 25. Just cut it just do it all at once. Get it out of the way. Get it out of the way. Give everyone a chance to adjust all at once, and just do a 1%, one full basis point. Bang, boom, do it and get it over with. And then if you want to do it again in 3 months, do it again. But this 25, it's stop. If you're going to cut it and get it over with and let people adjust. And then you'll have the mortgage market adjust, and they're like, oh, we got to do it slowly because we don't do anything slowly anymore. Everything, we got to a point where the most popular app on the planet, or the most popular apps now, show 15-second videos. And so we are an immediate audience now. So do it. Get it over with. Stop freaking playing games. And I hear all the other people on the other side, oh, we got to be careful because, we got to be careful because of inflation and this and that. And then meanwhile, inflation's already out there anyway. I mean, they're not doing anybody any justice by, they're not stopping inflation. And, the other thing is the way they stopped inflation is they stopped spending money on all this dopey shit that was causing all the inflation. I mean, so anyway, and then the other side, we got to make sure that doesn't. And meanwhile, the whole rest of the world is cutting interest rates while we just sit here with our hands on our ass. And it's like, what are we doing? What are we doing? And everybody's like, it'll cause hyperinflation. How do you know? How do you know it's going to cause hyper? How do you know? Do you really know? Just like the tariffs were supposed to cause all this shit, and it didn't. Just cut the interest rates. Give people a reason to go out and borrow money. Because it's not going to be just businesses. I mean, I know I have a couple of loans that I'll refinance for sure if they cut them. And I'm not alone. So anyway, that's my opinion on it. And just do it and get it over with. This 25 basis point bullshit is, it's just cut them, man. Cut it. If they cut it that much, you'd see the market would go up. The Dow would be up probably 2,000 points. The ES would be up 200, would be well over 700 or 7,000. The NASDAQ would probably get close to 30K. And you would literally probably, and bonds would probably even rally. Because then the government would be able to issue all this new debt at lower rates and refinance all that older debt that's out there. So anyway, that's it. That's all I got. Have a good trading day today. It looks like we're going to be in for like another chop house, but it's kind of the nature of the beast this time of year. And have a good one.